Hey traders, and welcome back to another video. A lot of traders trust the indicators blindly and then end up losing money due to false signals generated by them. Like in the case of RSI indicator, a lot of traders initiate buy position once the RSI line reaches at the 30 level, and after that the market goes below, which hits the stop loss, and hence it leads to loss. Using indicators would not make us profit every time, and that's where the technical tools like the support and resistance zones, trend lines, and supply and demand zones help us. And this is what is the topic of today's video. A lot of traders underestimate support and resistance zones, and hence they look for complicated analysis, and while doing so they get confused a lot of time and end up making losses into the market. So it's better to use the support and resistance zones to keep trading simple and profitable. So in this video we would first discuss the basics of the support and resistance zones, and after that we would reveal an advanced strategy of the support and resistance zones. So make sure to stick around for that. Now before we move on into the video, if you are interested in the topics like this, then like the video and don't forget to subscribe to never miss out any of our upcoming video. So to begin with, let us learn the basics of the support and resistance zones. So what is a support? The support is a level where there is a higher demand or high buying pressure from the buyer's side. The support zone can be in two forms. The first one is the equal lows support, and the second one is the trend line support. In the first form, which is equal lows support, the price first makes equal lows, and then it starts going above from this level multiple times. And hence we can call this zone a support zone, as it has provided support to the price multiple times. This support zone is preventing the price from falling below this level. The logic of this support zone is simple. The buyers who had bought at this support would have booked their profits either at this point or at this point. And after that, when the price comes down again to this level, the buyers become active and starts initiating their orders into the market. And due to this, the price has started going above again. Now let's see the second form, which is trend line support. Let's understand this through an example. So here is the chart of gold. The price is making higher highs and higher lows, which suggests of market being in an uptrend. The market is seen respecting this trend line 2 times, but we cannot trust this trend line until the market respects it for the 3rd time. The price has reached at this trend line, and so we will wait for the market to see if the market respects this trend line or breaks it below. The market started going above, which is why we can trust this trend line now. There's an important thing about the trend line that you must know. If the trend line is being respected by the market for 2 times, then avoid going long when it reaches at this trend line for the 3rd time. And instead of that, you should wait for the market to respect it for the 3rd time. And once it gets respected for the 3rd time, then you should go long. A lot of traders fall into this trap of trend lines wherein they initiate their long position after seeing this trend line getting respected for 2 times. And while doing so, they get trapped, as this was a liquidity grab. Now that we have learned about the basics of the support zone, let us move on to the resistance zone. The resistance zone is as its name suggests. The resistance zone acts as a ceiling to the price. The resistance zone prevents the price from going above this level. There are 2 forms of resistance zones, just like that of the support zone. The first one is called the trend line resistance. In this form, the price respects this trend line by going below from this trend line. This trend line can only be trusted if it gets respected by the market for at least 3 times. If the market does not respect it for at least 3 times, then you should avoid going short from this point. And similarly, the second form is called equal highs resistance zone. Let us understand this through an example. So here we have the chart of the market where it is making lower highs and lower lows. This indicates a market being in a downtrend, and as we are in the downtrend phase, we will find out areas from which we can go short into the market. So here we can see market making equal highs pattern, and after that, this level is getting respected for the 3rd time too. And hence, we can call this zone as resistance zone. The logic behind this resistance zone is simple. When the market reaches this resistance zone, the sellers becomes active and the buyers will avoid buying the stock at a higher price. This would increase the supply and decrease its demand, which would lead to a fall in price. There's an important thing about the support and resistance zones that you must know. A lot of traders consider the support and resistance zones as lines and not the zones. This is where they make a mistake and end up making heavy losses at times. Let us learn this through an example. So here we have the chart of the market where it is making higher highs and higher lows. This signals of market being in an uptrend, and thus, we will look out for the areas from which we can go long into the market. The market has respected this zone for 2 times, and now it is coming back to it. There will be a lot of buy orders pending at this support zone. If we see this support zone clearly, the price did not go below this level. But this time, the market did go below this level, which is why a lot of traders would avoid going long from this zone. Let's see how the market reacts. The market started going above from this point. The traders who didn't initiate their buy position from this support zone missed a nice opportunity. This is why we recommend you to treat the support and resistance levels as zones and not lines. The price would not always react at the same price which it did before. There would be a slight change in price when the market gives a reaction to this support and resistance zones. The price is being manipulated and is being sent below the support zone to hunt the stop loss and gather sell orders. This is done so that the big institutions can easily fulfill their buy orders, and likewise, during the bearish phase of the market, when the market makes a resistance zone, you should treat this zone as a level and not a line. Doing this would help you in not missing these types of golden opportunities into the market where you can make huge profits. Now that we have discussed about the basics of the support and resistance zones, let's move on to the strategy of the support and resistance zones. The strategy is about using the multi-time frame analysis along with the support and resistance zones. Let's learn this strategy through an example. So here we have the chart of the market where the price is making higher highs and higher lows. This suggests that the market is in an uptrend, and hence we would look out for the areas from which we can go long. The market has respected this level by making an upward movement when it reaches this zone, and thus we can call this zone as a support zone. There's a crucial thing here that you must know. The market went a little below as compared to the previous one, and that's why when going long into the market from this support zone, we will make sure to keep our stop loss below this level so that we won't get stepped out of the market easily. The price is coming back to the support zone. We can see that it is coming rapidly, which indicates that there are a large number of sellers here. In the situation like this, the market often goes below the support zone a little, and then it continues going above. The market has reached to the support zone. Now let's wait and see what happens next. The market went a little below the support zone, and after that it made a bullish move. This can be a trap also, and so we would wait for the market for making some more bullish candles. For getting the confirmation and then taking entry into the market, we would switch over to the lower time frame. So on the lower time frame, we can see that the market has made some bullish candles. This bullish move signals that the buyers have become dominant into the market. Now here is where we would go long from. The stop loss of our trade would remain below this candle's low, and the target of our trade would be 3:1. The market gradually went above, which helped us in making huge profits from the market. When the support and resistance zones are used along with the multi-time frame analysis, it gives out a splendid result to us. This brings us to the end of this video. So in this video, we revealed the best support and resistance zone strategy that would help you out in making huge profits from the market. But we recommend you to backtest the strategy before using it out for your trading. Now, before we end this video, if you found our video useful, then be sure to like it and don't forget to subscribe the channel so that you don't miss out our upcoming videos.